This is part 2, tax planning in retirement. Today we're going to talk about marginal versus effective rate. This is really important to understand as we go through this series. I'll pull all this together at the end and you'll see why calculating these things are really important. So let's understand what your marginal tax rate is. As you can see here, we have a progressive tax system. So look at this chart. You can see where this client of mine crossed through the 10%, 12%, and into the 22% bracket, okay? But if you look here at this chart, they didn't pay 22% on all of their dollars. That first 10%, then the next 12, and then the last 22%. This is widely misunderstood. Everybody thinks, well, I'm in the 22% bracket, I pay 22% income tax. That's not true. What you pay is actually called your effective rate. And this is really important to understand not only what your effective rate is, but how to calculate it. So let's go through what is your effective tax rate. Now, in this example here, we know that the client had income of about $173,000. We took off Schedule 1 deductions. There was a small business, took a loss of a couple $100, and that gives us our adjusted gross income. So this is on the front page of your 1040. You'll see adjusted gross income. Now take that adjusted gross income and take off your standard deduction or your itemized deductions. 95% of my clients are in the standard deduction because of it being so high now. So you take off the standard deduction, that's going to equal your taxable income. This is the amount that's actually taxable. So now you take that total tax that you owe and you divide it by that taxable income. And guess what it does? It gets you the effective rate. So as you see right here on this chart, you can see where this client has a 22% marginal rate, but a 15.5% effective rate. Why is that important? Remember in part 1 of the series, we talked about those income buckets in that location. Well, now you're taken out of that qualified bucket. How much tax do you need to withhold in federal and state income tax in order to not owe a bunch in taxes, or better yet, not overpay Uncle Sam, but get your taxes right? So again, your effective rate is really important. Just know that your marginal bracket is really where you start, but not where you end up. Look for part 3, where I go into further detail and how you can figure out tax planning in retirement for yourself.